Josh Smith, what's up, man? It's been a minute. And
Yeah, what's up,
since we
brother?
had a chance to connect, you and I were just sort of laughing. We are texting this weekend. And I got to tell you, dude, I know you feel bad about it, but I want to give you permission to not feel bad about it anymore because I'd forgotten about it. So you reminded me that we were going to record. And dude, we've been on each other's show like a couple of times now each over the years. And we were going to record another one. I don't even remember, was it last year or was it the year before? And and you didn't show up, and I like texted you. I was like, and you're like, oh man, I fucking forgot. Or so I'm like, I was like, I literally, bro, I forgot about it until we were texting the other day. So number one, permission to like forgive yourself, please. But number two, what I found more interesting is what you just started to say to me when I was like, hold on, let's record, which is kind of the why, like the mindset you were in. You were taking some time off, dude. So let's catch up there. Like, what kind of time off did you take, and what was that like for you?
Yeah. No, I appreciate that, man. And well, I appreciate your understanding and with that. But yeah, I mean, we go back a long time. We're good friends. I know how busy you are. I have so much respect for you. So the fact I wasted your time, I hate when people waste my time. So it's not a habit. I try to like I'm always, if you're not 5 minutes early, you're late kind of a guy, right? So but anyway, yeah, I mean, I this was this over. I mean, I think this was. I mean, it was about a year ago, or whatever it was. I can't remember the exact time frame. But yeah, no, I had just. Man, I was at a funky time in my life, dude. I was at a time where, I was for the first time, really in my entire life, dude. I was contemplating. I didn't know what I wanted to do. I was contemplating, like, dude, do I just fucking sell it all? I'd lost a lot of drive, motivation, and was really due to, like, I was at the point where I was shopping, like looking for farms, and I was ready to go fucking buy a farm, dude, and just
You're gonna go
sell
full
everything,
Tucker
be
Max.
done,
That's it.
go live off the grid, and that was really speaking to me, dude. So when you and I had scheduled that. And at that time, like, I wasn't taking meetings, but with you being a homie, I was like, yeah, I'll jump on your podcast. But I got so used to not having a damn thing to do each and every day that I wasn't checking my calendar. And that day it came up, dude. I just, like I told you, I had no good reason to miss it other than I just wasn't even looking at my calendar. I forgot about it. And, so I didn't even have a valid excuse or a reason. But yeah, that's where I was at, man, and gained a lot of clarity from that. What was really interesting was after that forced time off, because in the beginning it was a desired. Then it got to the point where it was pain and I wanted to jump back into things. But I was like, all right, man, if I was having these feelings, maybe I need to give myself enough time, to really get clarity on what I truly want. Well, just turned 41. So this is when I, just turned 40, right before I turned 40, as this time was going on. And I was like, all right, man, like, what do I want to do with the next half of my life or so, and so I forced myself, as painful as it was, dude, to take, it was about 8 full months. It was almost a full year
Wow.
I had, and I still had some work. I mean, I still have businesses. So I had, some work commitment, but it was minimum, I mean, it was, a few hours a week, dude,
Yeah.
of just, mandatory things. And, luckily I've got a lot of great people that work inside my different organizations that were able to, continue running the show and grow the businesses without my involvement at that time. So, but the interesting part, dude, is through all of that, it reignited the fire, the passion, the desire, and the clarity that I had was, dude, I want to keep doing the same shit, just do more of it. Like, it wasn't anything different. It wasn't anything new, and part of me, after, as I reflect on it, it's like I kicked myself for taking that time off. Cause you always, I lost momentum and, whatever. But the blessing of that was, and why I think it was a good thing is, now I have more clarity, more drive. Like, I'm more certain that this is the right path than ever before.
Yeah, dude. So the reason I was so interested in talking about that, because I know that probably felt like a weird place to start, was I went through a similar patch this year. So you and I'll get this out before the end of the year. So it's, we're recording though. It's like the end of November, just for timestamp sakes in 2022. And earlier this year, I don't know what it was, man. My grandfather passed away, and totally unexpected, um, like shocked the whole family, and kind of like the one, like, he was like the grandfather that everybody was close to, like that guy fixed everybody's cars, like that grandfather. And then a couple weeks later, more expected, but still painful. My uncle passed away. So I don't know if it was like a combination of that and then my primary business, like the real estate team, it really got into it's just been in a really good place. Like it's a seventh level, it's really been a seventh level business for me for years. And it was, it was easy and enjoyable because I didn't do a lot with like it doesn't require a lot. It didn't require a lot. And so I don't know, like it's funny, the more time I had on my hands, the more time I felt sort of unsure of what I should be doing next. And so I went through this whole thing, like really the whole spring. And sometime in like March, I was like, you know what? This year for summer vacation, like I normally just mostly take July off and go to San Diego. Like I'm taking June and July off, and I'm not really working. And so I did that, and I think that's really after sort of sitting still for the better part of 60 days, like my mind started racing again, and I kind of started getting into it. And even just now, I feel like though I'm just sort of getting clarity because then I had a bunch of pent up stuff to do August, September, October. And now it's kind of like things are just starting to come out clear, but very similar to you, like truthfully, what I'm doing now going forward, what Fred and I are focused on now going forward isn't a whole lot different. If anything, it's just a better version of what we had been doing. But it took that, dude. It took some downtime, and I had the same thought, bro. Like I was kind of like, I wasn't necessarily going to go buy a farm, but I was thinking like, what do I do, man? I was having some real conversations with myself and with anybody I can get to listen to me because I was unsure of what the hell to do. So it's interesting to me. Was there was there anything that led you to back to your answer that or anything that helped you kind of get back to clarity?
Dude, I mean, yeah, I mean, there was, I mean, I don't know, you spend enough time just sitting alone with your. Now, when I say alone, I mean I've got 3 young kids and I'm
Yeah,
married, got 2
there's
dogs,
no real alone
but
time.
also with that, I mean, they're in school, they're doing their things, they got their friends, so it was the most time in solitude I'd ever spent. And I'm always I always being an introvert like I am, I mean, solitude is really important to me, but that was even more so, because in order to really get extreme clarity, I've found, at least for me, dude, I have to remove the noise, man. When you're addicted to your phone, you're looking at social media, you go, 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 client, 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 business, 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 meeting, 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 fucking putting out fire after fire. And then it's like, then you get done with that, you jam home, have dinner with the family, hang out with them. Now you're exhausted, you pass out, you go to bed, you get up, you work out, and you do that on repeat for me, it was, almost 20 years that I've been, in the real estate business. It would just go, 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 dude. I mean, it's 18 years now. Um, uh, uh, in, it was that, again, that first time that I, again, was able to really slow down enough to think deeply enough, about those different things that I wanted. And through that, yeah, and I work with a great peak performance mindset coach, I guess the kind of like a Tony Robbins style coach, that she's a psychologist by trade but works with entrepreneurs and executives and so forth, named Camille Rose Taylor. And so did a lot of work with her, just trying to gain that clarity. She's the best person that I found that for me to help me gain that clarity, and, a lot of self-development and just listening to myself internally, dude. So as I started looking at these other things, and as I started, jumping on planes to look at other properties and, doing all of this other stuff, man, I just felt, I could just internally feel it, man. Just that calling back to, no, this is what I really want. Like, I'm not done yet, man. This game isn't over for me. I'm not done. As I really said, I'm like, what the fuck am I going to do with myself? I go buy this farm. Like, I'm going to get bored. And really through that time, what's interesting is, I have so many friends that have done very well in the business world that were able to sell for big exits. And it seems like all of them, man, within about that 6-month time frame, they hit this wall where it's like I mean, even though financially they're set for life, like they can't retire. Like you just get to a point like, what the fuck are you gonna do with yourself? What the fuck are you gonna do with your life? And I really got to the point, dude, like, and this is where I said when I hit that pain point and I forced myself to kind of sit in that pain for longer, Just so I didn't rush the decision, dude, I started to get more miserable than like, like you think, oh, like having this time off and dude, it was the most miserable time, man. Like I was getting depressed. Like I was getting into a bad state, dude. Like, where I'm most happy is, when I'm expanding, when I'm growing, when I'm like learning and building and growing, even if I'm struggling in that moment, let's just say business is maybe down, I'm losing money, we've all had those times in our business career, but that challenge, man, that's what excites me. And that's what, and having that missing from my life, I don't know if this is 100% true, but I heard at one point that the average person ends up dying 5 years within, or like after retirement.
Yeah.
And it's like, okay, like that makes sense to me. And it really became apparent of, dude, like I was allowing myself to get into this decay mode. I truly believe if we're not growing, we're dying. And I wasn't growing anymore. And yeah, I mean, I was reading books, but I was like, what the fuck am I going to try to be Socrates and just sit on the beach and fucking become a philosopher? Right? I just went through that pain point and just had this burning desire just to get back into it. And then I started looking at too of, okay, like if I sell all this stuff, then maybe I can just go manage my own money, invest in this other stuff. So I started looking at, some different things and talking to other mentors that are heavy in that path. And it just became apparent to me personally that, dude, this was the path, man. Like real estate, I have an obsession, a deep love for it, man. It changed every aspect of my life. I wouldn't, not just from a financial perspective. I mean, people talk about it all the time, but I'm like, just from all the people I've met and the mentors and the connections, and it's really improved every aspect of my life. And I'm like, this is what I need to be, dude. It's what I love. It's what I'm obsessed with. It's where my people are at. But it gave me that clarity of that full knowing of, this is the lane I need to be in, that I'm supposed to be in for the rest of my life.
Yeah, I so resonate with what you said. I kind of felt the same thing. One of the things I said to Fred earlier this year was like, and I mean that, like, no one should feel bad for you. No one should feel bad for me. We're both incredibly lucky, blessed, whatever word you want to put on it. Like we've been very fortunate. We live great lives. But one of the things I said to Fred, and I think you might be able to relate to this, is like, dude, at least before, if I was like uninterested, we had to eat next month. And so I had that to rely on. Like I guess I kind of had like my fight or flight maybe to rely on to be able to get me excited about getting up and going at it the next day. And so it's funny, dude, I went through this. I've went through a very similar thing. Um, and gosh, dude, this morning I was out walking my dog and super early in the morning. So I just woke up early today and I was listening to this podcast I love on business called My First Million. I don't know if you ever heard it. But just two really smart guys, founders that have, had some decent size exits, and they're just business idea guys. Nonetheless, the point of it today, they were talking about exits. Like they both have been through an exit recently, but they've both got some friends that have been through it and experience exactly what you just referred to of like, hey, they get, 90, 180 days in, and it's like this thing that they thought was going to be awesome kind of becomes hell. The thing that I found interesting was like the way some of their friends that they gave examples of sort of got to whatever their piece was, right? So for some, it was like going back and building something big and started something, all over again. Other one, it was like just more of like, hey, I turned a hobby into a business and that made it fun for me again, stuff like that. For me, dude, I read a book called Die with Zero. Have you read that?
Yep.
That book fucking shook me, like legit, just sort of grabbed me. And it's funny because that's more about like, in a way, not working as much. But it really forced me to think about certain things and kind of put priority on things and just sort of think about, well, optimizing life in a different way. And I think that kind of helped me get back sort of on the road to being more focused. So I love hearing kind of your journey there and where you've been. And I think similar, I came up with the thought of like, I know what I'm really good at. Like, am I going to go start something new tomorrow outside of this and be able to? I couldn't even replicate this in 5 years if I tried, right? Like, without some real dumb luck. Like, I should probably just lean into the thing that I already love doing and love being around, which is, in the real estate world. So, Love that. So, dude, after all this, like, what's going on in your mind now? Like, what's the next year or two look like for you?
Just massive growth, dude. Obviously with the time that we're in right now, and I'm guessing that the vast majority of those watching or listening to this podcast are tied to the real estate industry. There's a lot of big shifts taking place right now, man. I want to take advantage of this time. I think it's going to be the opportunity of our lifetimes to go out there and position ourselves, in a better position than ever before. From what I see, I believe that this is going to be worse than 2008. I believe that we're going to go into a global depression. But historically, times of depressions and deep recessions, there's more millionaires and billionaires created than any other time. And the opportunities that are going to be had, it was interesting. I was just talking with my Facebook marketing rep, if you will, Meta. Once you start spending a certain sort of ad spend on there, you get assigned direct reps, that work at Meta to help you grow and scale your ads. And I was having a conversation with the amount of marketers that are dropping off from the Meta platform, and you can see it in their stock price. I mean, they're down about 50% valuation. And, but that to me is just showing, okay, like this is that time, dude. Like I want to be the firefighter. And I've always done this in business, I did the same thing leading into 2008. It's like, okay, when everybody else was dropping back in marketing, dropping back in ad spend, laying off people, it's like, dude, okay, I could scale up my ad spend, and get new leads at a discount because they're cheaper, at that point. I could hire more additional staff at a discount, and of course you got to be intelligent with this stuff. I'm not trying to tell anybody to go out there and be fiscally responsible. I'm tracking everything. I'm making sure everything's getting the right ROI, like, I mean, you got to be fiscally responsible with this stuff, especially during times like this. But man, I'm just freaking excited about, but I mean, when I say that, that might come off bad in that I hate seeing people get hurt in bad, rough financial times, but that's inevitable. I can't control that. It's,
Yep.
so if I'm looking at the silver lining with it, like I can't control this manufactured collapse that's taking place right now. It's beyond my control, dude, right? But I'm going to take full advantage of it and make the best out of it that I possibly can. So yeah, I got a lot of big things going on, man. With, I've made in the past few months since I've been, back at this full time now, I made some of the biggest acquisitions and the biggest moves that I've ever made in my career. And I've got a few more that I'm in the middle of right now, just to go out there and grow and expand on all fronts, dude.
That's awesome, man. So, you are so, you know, does that include? I mean, dude, you've done so much in the coaching and training space for real estate agents over the last decade, at least the last decade. Like, I'm assuming, is that part of your growth plans too? Are you going to go out and expand what you've been doing there?
Yeah, all fronts, everything, but everything real estate, dude. I had several of the companies that were not tied to the real estate industry, which I've exited all from all other than my supplement company. So I still have that, but that's, I mean, I've got a great business partner that does all of the formulations and, so everything else, I've got a great team. Like, and honestly, not only am I passionate about that, it's kind of like a business that's a hobby for me.
Yeah.
But I'm almost learned more about real estate from that industry, because like when you are trying to go out there and market and scale e-commerce, especially in a saturated business like supplements, dude, it forces me to level up in everything else that I do at such a massive scale. So, but it doesn't require an insane amount of time. So, but everything else, I mean, at this point, dude, I've got, really three main focuses, man. Growing on the brokerage side, the real estate company side, like growing, expanding that, growing, expanding the coaching side bigger than I ever have in the past. And then I've got my software company, which is website in a CRM for real estate agents. But they all three are also, one of the mistakes I made in the past, dude, with businesses. So several years ago, I got to the point where I had about a dozen different businesses simultaneously. And my thought process was, okay, let me go out there and create this back end team. So I had bookkeepers, I had developers, I had videographers, graphic designers, and loving back end operations like I do, and also marketing like I do. I'm like, let me go out there and gain strategic partnerships with others that like they're badasses in their space. Like they know their space. They're amazing at it. They're the name, they're the face, they're the knowledge base. but they don't know they don't know, they're bad at the back end, right? So, which is most business owners, right? And then I'm like, my team will manage the back end. And then my thought process was like, shit, I can go out there and have 100 of these strategic partnerships, and really scale this. The thing I didn't account for, there's two things I didn't account for. Number one was the difficulty of learning each different avatar and the amount of time that really takes to get that really intimate knowledge that we need to have success with marketing and just overall improving that experience and really nailing all those things you got to nail. Like, you really got to know your ideal client, your avatar at an intimate level. So the time it took for different, like, dude, like I was out there working at a consulting firm with nationwide physicians in the concierge physician kind of optimal health space. So like, I'm having to work with doctors on like upselling blood work and like all this different, like, and then I jump over here to apparel. Then I jump over here to, workout programs, and I jump over here, like all these different, so, and then the second component that I didn't account for was managing the different strong personalities of each different business partner, and there's a lot of great lessons. It was the biggest costly mistake of my life, multiple, is 7-figure plus, a mistake, because when I exited for each of my partners, dude, I was now part of that partnership too. In most cases, I was also the bank, right? Which I'd get that paid back to me, and so forth. But with that, because I felt bad, because it got to the point where the first point in my life that I each and every day was I had to break a commitment to somebody. It was like, okay, who would I break a commitment to today? My wife, my kids, or a business partner? So it's like the first time in my life I got to the point where I was beyond a capacity where I couldn't pull my own weight. And there's a lot of guilt I was feeling, and so forth. And so I went to, all my partners and was just like, hey, I need out. You don't need to buy me out. You don't need to give me anything back. I'll make sure you're set up, make sure that you're able to succeed. I just need it out, dude. And I get criticized for that from many others, but for me, it was, this thing of like, look, man, it was my fault. Like, all my partners were amazing. They didn't do anything wrong. Like, I overcommitted, dude, right? It was my fault. So I felt it was the right thing to do. But the learning lesson was massive. But one of the biggest learning lessons that I had with it is, okay, yeah, you can layer on multiple different businesses, but they all have to be in the same ecosystem. So it's like, okay, like, and, we didn't talk about the, the podcast, but, like, that's the main hub that then feeds everything else. So it's like, like, okay, 42% of our software clients, I mean, we've, over the years, acquired, thousands of software clients, all throughout North America, realtors, team leaders, and broker owners, utilizing our software without ever having to spend a marketing dollar. 42% of my coaching clients end up signing up for the software, even though it's not part of the program. They don't need it, but they see that, hey man, all your, everything's already built in here, all your scripts, all your like everything's already built in here, so they end up just, going out there and so when you have it set up, each thing can feed that thing, that next thing, and it's all in the same ecosystem. I mean, an example of this is if you have a real estate team or a brokerage, and you do a JV with title, you do a JV with mortgage, you start adding these ancillaries, where it's like, okay, with those JVs, okay, yeah, I've got this, this other team in place over here, this other product over here, but it's like, if I just grow my real estate business, right, these are other services that the more I have my real estate business, like, that's just more deals I can send my lender, more deals I can send my title company, like, it all lives in that same ecosystem, even though they're technically separate businesses, but they all kind of, again, live in that same ecosystem. So, that was like the most important lesson I've learned there. So now it's, I felt like, okay, I needed the right vehicle set up in that ecosystem. So then I can go out there and scale it and identifying, what's that big domino that knocks over the rest.
Let me ask you this. If you could go back and talk to yourself prior to entering all those businesses, I guess, kind of a two-part question. What advice in hindsight would you give yourself? And maybe the more important question, would that version of Josh even fucking have listened to the wiser Josh?
Yeah, that's the tough part, dude, because at that time, to be honest with you, there was a big part of me internally that, hadn't felt like I made it in business because it was real estate, which is weird. I don't know why I felt that, but I felt like I needed to, prove to myself that I could have success in other ventures, and it just really attracted me, dude. And I just, so I don't know, man, because I felt this like burnt, like I needed that internally, you know, and dude, like, I mean, each of those were, yeah, I mean, it lost money, time, momentum, energy, all of those things, dude. I mean, if you start counting in lost revenue from the distraction of like the lost revenue that my business is, that, because when I got to that point where I had those, dozen different businesses, and I was well above my capacity, everything started coming down. So we're not just talking like not investment startup capital, but then lost, like, dude, I mean, lost revenue that my coaching company wasn't making, all of those things. I mean, it gets into multi-million-dollar mistake. But it was such a powerful lesson to be learned. And so I'm so much better for it. So I don't know. I mean, to me, it's, I don't like to live in the shoulda, woulda, coulda. It's, dude, it was a powerful lesson that I learned. There may be a part of me that needed to learn that. I'm glad I went through it, as painful as it was, dude. I'm blessed that I went through it. I know a lot of people don't look at that. That I've had multiple times now where I've lost everything, and then I've had to rebuild. It's kind of like a cycle I've went through, and maybe that's on a subconscious level, dude. That when things get too comfortable, like I who knows what it is, but also for me on a core value standpoint, this might sound bad or weird or whatever, but I really don't give a fuck about money. To me, it's a piece of paper. It's like, I want to have enough, but outside, like, I don't, it's not what really drives me, so, yeah, I don't, but see, and so, yeah, maybe my old self, or if I had that conversation, I wouldn't have listened, but again, like, dude, the lessons I learned from it have been monumental. But if I could go, like, the advice I give people all the time right now is, number one, never start another business until you got the right team, the right people, like, until you've gotten to the point where you've got this machine built where you're fully able to step out and give that new venture your full focus and the focus that it needs, to go out there and really start crushing it. Like, as an example, I didn't start my second business until, I'd been in the real estate business for almost 8 years, or a little bit, maybe even over 8 years, but I had already built up my team, to a point where, had a badass, ops manager, that was replaced me as the team leader. So then I could go out there and devote 60, 70, 80 hours of my a week, to starting the coaching company and the podcast, and other things. So, I see so many that, like, before they're ready, they want to jump into that next thing, but then from there, like, making sure that ecosystem, dude, is, like I talked about, dude, like, I would have never done it now, right? Like, so if I would have known that, if I could talk to myself about that today and just explain the importance of the ecosystem, and have everything, the things that feed off of each other, I wish to God I would have known that and understood that, but maybe I had to go through it to understand it.
Yeah.
Difference between knowing and understanding, dude. Huge fucking difference.
No doubt. Maybe a better way to ask you the question would be, let's say it was me. Let's say I'm like getting ready to make the same decisions that Josh, when Josh, 1.2 made, and you saw that coming, like, how would you coach me, or, or advise me, knowing what having gone through what you've gone through? Would it be to, would it be for me to dive into it? I'm just making myself up as like I'm not actually trying to do that, but like, as if you were my coach or mentor, would you be saying, hey, avoid this at all costs, here's why? Or do you think your approach would be like, hey, be calculated but go do it, kind of like, when you let your kid fall off the bike type of deal? Do you know what I mean?
Yeah, no, I mean, I would have highly advised you to not do it. And I mean, just for the reasons that I've already repeated there. Um, um, and one thing I'm always going back to, dude, and this is my advice to other people, even though I don't follow it personally, is, like, look, dude, if I gave all my energy and attention and focus to one thing, to one business, I mean, it could be so massive. I could, because when you're running multiple different businesses, even if they all feed off the same ecosystem to a point, I'm going to kind of backtrack my words here a little bit, but Like it's different if you go out there and grow a brokerage and you start adding the ancillaries. That's like having a movie theater that also offers candy and fucking soda and popcorn, right? Like that's just smart business. But what I mean by this is, okay, if I gave all of me to my real estate business versus trying to give, a third of me to my real estate business, a third of me to my software business, a third, because there's still three different teams, three different total products, three different sets of headaches and challenges. And, so then from there, it's like, as a CEO, I'm split into thirds on each different business, and the reality is okay, guy, like we see, like, Elon Musk going out there and pulling this shit off, but like, dude, there's only one Elon Musk. Like, I got to deal in realities. Like, I might have some skills and talents, but I'm not that dude, man. And also at the same point, like health and fitness is important to me. My kids are important to me, and my family, like I want to spend that time. I'm not willing to, sacrifice, and be an absent father and have a failed marriage and have shitty health either, right? So, so looking at that, yeah, I mean, I would, that's the advice I really try to get, but be strategic with it, setting up those ecosystems, when it makes sense, like as an example, like I'll just use a title company JV as an example. Like there's going to be like, you need to have a certain production coming in, but then even there, like, even though that's a JV, you still got to carry the flag. You still got to have enough time and energy and be in a position where you still can go out there and promote it correctly and make sure it's set up correctly and make sure that, the fulfillment side is done correctly. Like nothing, there's like, people even talk about like, like real estate. Oh, it's just residual or passive income. Yeah, it is. But like nothing comes without headache. Nothing like it all takes time, energy, so being ready that you're prepared and mapping out at the right times inside your business where it makes sense, from a size growth standpoint, a financial standpoint, and a time standpoint, to bring on these next pillars, but yeah, I would tell anybody that I possibly could to avoid jumping into, having, it's like, okay, like I have my real estate business and then go open up a donut shop or something,
Yeah.
it's like, okay, if that's a hobby of yours and, okay, but if they're not going to feed each other and say, like, it's going to create a lot more resistance, dude.
Yeah, no doubt about it. To go back to something you said a second ago, I think a lot of folks, we mix up the words, or we tend to think that residual and passive are the same things. Like residual income, that just means it keeps coming. It doesn't mean that it's passive. Like even in a passive business, like like example, my rev share business at EXP, like it's residual. Yes, the check, like owning if I owned an independent brokerage, like it's residual in the sense that it comes every month and every year, etc. But it's not passive in the sense that I don't do anything. Like you've got to do things, and most businesses, like especially in startup mode or early stage mode, like you're working a lot. Like there's a whole lot more active work that goes into building residual income that may one day or may not ever become passive, right?
Yeah. Well, and to your point, dude, like with your downline, right, at EXP, so if we look at, okay, if we repeat what happened and during the great financial crisis, I mean, what nationwide, there's about, somewhere between, I can't remember the exact numbers, but somewhere between 30 to 40% of agents dropped out during that time, just pieced out. Like we went from like 1.3 million down to 1 million or whatever it was, right? So then from there, it's like, okay, if you want to then maintain even the amount of money that you're making, like you always got to be adding to it, but then, right, like you got to be supporting those agents. You got to be helping them, grow and expand doing that production. So hopefully they don't become a statistic. So like at some point, if you start to neglect it, even if you think it's residual or passive, it's going to shrink. It's going to be impacted. Even past, I mean, just look at like right now, we have the worst stock market in the last 50 years, the worst bond market that we've seen in 250 years. So if you were passive in like if you were passive with your 401k or your IRA or or if you're playing in the bond space, like you've taken a hard hit and you're going to, like, the hard hit is just
It's just
beginning.
it's like round one,
right? Like people have no idea how fucked things are right now, dude. So dude, I talk to people, family members all the time that are, oh, well, dude, my 401k, just hoping that, and then I'm like, what are you doing with it, dude? Like, why don't you fucking yank that? And, now I'm not a financial advisor, so don't, but it's like, why don't you yank that and put it into T-bills or something? It's like everybody I know right now that I look up to as, my mentors that, has net worth a hell lot more than I do. Like right now they're all in preservation mode.
Mhm.
It's like they're not trying to look at making money right now. They're just trying to preserve the money that they have, dude. And then if they can go out there and park, it's like, why are interest rates going up so high right now? It's because all the fucking money that's, going into MBSs is going into T-bills, because we have this global sell-off of T-bills because the strength of the US dollar globally is forcing, countries like Japan and throughout the EU to liquidate their US treasuries. Well, they need to go out there and have buyers for that. So you look at these yields on your treasuries, that's risk-free money. So if I can, as an investor, go get 5%, park it over here for risk-free money, all that money's going over there to the point right now where central banks and the Treasury Department are having to practice yield curve control and are having to buy up all this debt, even though they're not supposed to be quantitative easing. But that's essentially what they're doing behind the scenes and not telling us, because it's getting so out of control. If that wasn't taking place, then mortgage rates would probably be 8% right now, or even higher, maybe 10%. So yeah, dude, there's no such thing. Like you neglect something, dude, you're gonna get hurt.
Yeah, dude. No doubt about it. Gosh, that's so much to unpack there. Um, when you think about that, so I mean, hopefully the listener didn't just get depressed over the last 3 minutes, but like when you think of opportunity, kind of go back to something you talked about a few minutes ago, which is, listen, man, uh, nothing could ever be better for my business than I'll say a crashed market. I don't want there to be a crashed market. Truthfully, we probably have a little bit different viewpoints, but that doesn't matter on to what degree. The degree is like things have changed and they're going to continue to change and not be good for the foreseeable future. With that in mind, from a business strategy standpoint, what are you most excited about like as a real estate agent or investor? What do you think about like, hey, over the next, say, year or two that really just gets you excited?
So there's a couple components with this. And again, man, when I say it's not like look, I wish these things didn't happen, but I can't control that. So I have to adapt and shift to them. Now when people talk about a crash market, let's talk about the difference between a crash and a correction. A crash is just beyond 20%. So Phoenix is already in a crash right now, right? Like if you look at how much our real estate market's depreciated, and then you stack onto that with the rate of inflation, like we're already technically in a market crash. And there's lots of different ways that this stuff can go out. Now, I don't have a crystal ball. Now, in Phoenix, I know that our market is kind of a boom and bust market. So a lot of the country or whoever's listening to this may not be in that state yet. But it's like, okay, if the real estate market stays stable, and I don't know if this is still the predictions, but you saw like Redfin and Zillow,
Yeah.
last year or so, like, I saw all these predictions of, oh, well, market will slow down. We'll probably have like a 3% 3% real estate appreciation for years to come. So let's just say that takes place, right? So you got 3% year over year real estate appreciation. Well, with inflation that we're experiencing right now, let's just say at 8%,
I
if
was gonna
that can,
say that's being kind at 8%. It might really be more like 9 or 10.
yeah, well, dude, I mean, true inflation is around 16.4% today. Like, if we were to calculate it, like it always gets compared to, oh, this is the worst that we've seen in 40 years. Always gets compared to the 70s and early 80s, that decade time frame of that stagflation, that high inflation period. However, Clinton's administration changed the calculations of how we calculate CPI, because you got to understand that that's how Social Security is paid off, whatever. So, they're going to go out there and manipulate the numbers. And look, I don't think that's a good thing, bad, whatever. It just is what it is. I don't think in terms of good, bad. It just fucking is what it is. So if you look at, and if you calculate, and you go to Shadow Stats to look at these, where they calculate these models, like if you look at, okay, how we calculated inflation back in the 70s, how we calculated historically pre-Clinton's administration, we'd be at 16.4% right now. Fucking unemployment would be 25% right now. And they're telling us it's 3.5%, 3.6%,
Yep.
but they don't calculate in the non-job participation rates and all those things like they used to, right? But let's just say we stay at 8%, over that same 10-year period. So you got 10 years where you got 3%. So you got real estate prices going up 3% year over year, but you got cost of life, inflation going up at 8%, right? Well, over that 10-year period of time, you had a 50% correction in the real estate market.
Fuck.
So both can go up, and we could still have a correction / crash if you want to look at it in those terms, right?
Dude.
Now I don't. I think we are going to crash and burn hard for a multitude of different reasons. But the average consumer today is in a way worse off position prior to the great financial crisis. We're in the biggest all asset bubble of all times, right? Like all asset class bubble of all time in recorded history on all fronts. We're also in the biggest debt bubble of all times on a magnitudes of scale that we've never seen before. I mean, if you look at just government debt globally, it's on balance or on like they're on balance sheet debt. So if you look at the United States, you got $30 trillion of on balance sheet debt roughly, but then the off balance sheet debt is closer to about 150 trillion, right? But on balance sheet debt that we are aware of, there's over $300 trillion of just government debt. Then you look at like the derivatives market, nobody really knows how much is, but the most brilliant minds out there predict that there's over $1 quadrillion in the derivatives market. So when you look at record high amounts of government debt, corporate debt, consumer debt, you look at like right now, dude, you got over $1 trillion here in the United States in student loan debt that is still in forbearance. That's not being charged. You got 700 billion that is actually being, so you got $1.7 trillion of just student loan debt in the United States. So you look at all these people that are already paycheck to paycheck. You got 1 in 6 households right now in America that can't even afford their utility bills. They're behind on utility bills. So then you add, there's a reason why they keep pushing this shit out, right? Right now today you got 15,000 daily car repos taking place here in the United States, to the point where the banks are not taking those to auction, because the second they do, they have to realize those on their balance sheet, and they're afraid that that alone will put them into a liquidity crisis. And if you look at the great financial crisis, what caused that? A liquidity crisis. Well, we could blame it on real estate, you could blame it on whatever else, but it came down to a liquidity crisis. And so when I look at all of these different fronts, I'm like, dude, there's no, because the other difference between like 2008 was that was a U.S. problem that spilled over that the rest of the world felt, and it hurt. When you had the biggest economy on the planet and it gets crushed, the rest of the world's going to feel that. Right now, this is a global problem to the point where, as bad as our problems are, we're like in the best position out of everybody else, and we're fucked. Right? So. This is, like, I don't know how this gets fixed. I truly believe that the system actually broke in 2008, was never fixed. They just kept band-aiding it. And now we're finally facing that music, but with that being said, I know you talked about earlier that might've depressed everybody. And look, you have, to me, I'd rather know if somebody's coming to punch me in the face so I can get the hell out of the way. Like, I'm just like, I want to deal in realities, like be careful of just going out there and trying to listen to content that just re-solidifies the narrative that you hope to be true. That's typically what people do with self-development, watching YouTube and so forth. For me, like, dude, I analyze all aspects of it, from people that don't believe we're going to head into recession to all the way to the extremes, and then from there, I'll make up my own conclusions, but I'm going to always operate from a hope for the best, plan for the worst. I hope none of this stuff happens, but I'm going to plan for it. I'm planning right now on the worst real estate housing crash that our country's ever seen. Now, 2008, the great financial crisis, was the worst housing market that we've ever experienced. So I'm planning on this to be more severe. Now, hopefully it doesn't happen. And part of me does hope that it happens, though, right? When you look at like last year's example, your average first-time buyer throughout the country was like 37 years old. That's not fucking healthy long-term as a country. So what we got to really ask ourselves is, do we want our dollar to be worth more or less? Like, we can keep appreciating all of this shit, but that just means that our dollar, like, the money that you're making is worth less and less. Like, do you want your dollar to be stronger? Do you want it to be worth, or do you want it to be weaker? Do you want it to be stronger? That means we're going to have to go through these deflationary times. So I think long term, even though we go through some pain, it'll be good for us as a country. Plus, dude, like, we just need a slap as a country, right? Like, and this is just me kind of getting, personal on this, but it's like, good times create weak people, hard times create strong people, right? So, like, all this political correctness, and that's a manifestation of a weak society, right? Like, we get too focused on stupid shit because life's been too good for so long.
We create shit to be mad about.
Yeah. I think that all of this will be good, overall, even though we got to go through some pain, to get there. But then from there, okay, the amount of real estate, like you've got to understand that historically, I'm just going to speak specific to real estate here. Historically, real estate's always traded hands, always has, always will. Even though transaction count is down right now, I would argue, though, that the amount of realtors dropping out right now or that are just disengaged, depressed, unmotivated, just not doing shit, even if they're keeping their license and hanging on, the amount of the disengage and those opting out is far greater than the amount of lesser transactions taking place. So it means then that the pie is bigger, that much bigger for those of us that are willing to go out there and hit it hard, man, and go out there and crush it and do whatever it takes to go out there and succeed. Now, during transition of shifts, that's the toughest time, because there's going to be that time where when the shift is extreme enough, there will be apparent ideal clients that the market is great for. And by that, I mean, like you look at like BlackRock right now, they've raised over $60 billion in just the last, or over 50 billion, sorry, in the last 60 days. And that's just what they've already raised. They're going to be raising a hell of a lot more to come in and start. And all of this is for single family attached properties, right? So once the market corrects or crashes to a point where their cap rates are at where they need to be for their model, they're going to come in and start swallowing up so much property. You got companies like blockpower.io that are looking to buy over 100 million units in North America, turn them into green, smart properties, and go out there and rent them out. Like those all need realtors to go out there and help those people out. There'll be a point in time where it's great for traditional investors to come back in and get good ROIs. There'll be time where, it's affordable again for regular buyers, and so like the market, I look at this as always, there's no such thing as a good market or a bad market. The market is always good for somebody. We just need to identify whom the market is good for, pivot and shift and adapt our marketing, our prospecting, our efforts to whom the market is good for. Now, one of the difficult parts though is in the beginning stages of a transition, you go through this gray area phase where it's like not necessarily great for sellers, not necessarily great for investors, not necessarily great for buyers, well, then at that point, so that's kind of where we are right now. And I look at it like what transactions are about 52% or whatever here in the Phoenix market. So then, okay, if there's 50% less transactions happening, well, then I got to generate double the amount of leads. I got to follow up twice as much to go out there and do the same business. But again, eventually with the amount of agents dropping out, so the bigger piece of pie to be had. And as it becomes more apparent for who the market is good for, like at that point, like it's going to be, dude, game over, man. And you and I went through this before. There's going to, what we'll see whether, we're already starting to prep and get re-educated, with our team for short sales. Cause I think that we'll start to see some of those hardships in the next 6 months. We're not marketing for it. We're not prospecting for it. We're just getting ready. Cause I believe that we'll be there in the next 6 months where we start to see enough of them to make it make sense to start targeting it again. I don't know if REO is going to happen in the same way. If you look at what HUD's been doing with packaging them up and shifting BlackRock. And so I don't know if, Fannie and Freddie are going to follow that model now that BlackRock essentially is the main major institutional investor, in those organizations now. But short sales I can control, but then from there, it's getting that clarity on, okay, who is the market good for? So I'm looking, okay, who's buying, who's selling, why are they buying, why are they selling, where are they coming from, where are they going? Like who is the market currently good for? So we start focusing on this. I'm like, okay, right now it's great for I want buyers right now. Dude, buyers are in control. I want buyers right now. Like for the first time in my business, dude, my buyer business right now, my buyers 67% of my business right now today,
Wow.
More skewed than it's ever been. Right. But we're like, dude, I want buyers. They're in control. Listings, kind of more of a pain in the ass right now. Not that we're not taking them, but from a prospecting marketing standpoint, we're going after buyers, but then from there, I'm like, okay, if I start looking at, okay, buy a house today here in Phoenix versus a year ago, probably get that house for, let's just say $100,000 less today, at a certain price point than you could a year ago. A year ago, you'd have to settle for the property, settle for the location. You'd be competing against 50 other offers. You'd have to pay the appraisal gap. Seller wouldn't do shit for repairs. So it's like, okay, today now you can go, there's 3 times the inventory. So you can find exactly what you want. Right? You're not competing against anybody else. You get that house for $50,000 to $100,000 less. You're not having to pay the difference for the appraisal gap. You get the seller to do repairs, but even with all those, so all that sounds great, but even with that, because interest rates, if you look at that today, interest rates, even though the house is $100,000 less, like you look at $600,000 house today versus, or a $600,000 house, last year versus a $500,000 house today, if a 20% down conventional buyer with the interest rate differential, it's still like $500 more a month for that buyer today that's buying that house, So then from there, it's like, okay, well, how do we solve that problem? How do we go out there and solve that affordability issue? So then I'm sitting there like, okay, well, who's desperate right now? Okay, I know builders are they got over a 12 months worth of inventory sitting on their, and these builders are smart people, dude. They're multi-billion-dollar organizations. They're smart. They know what's going on. They know how ugly this is going to get. If anybody's willing to wheel and deal, it's going to be builders. So we just went out and negotiated with all the builders in our market, that they, markets that we work with. Like, hey, look, we got buyers all day long for your product. We just need you to offer a big enough incentive to buy down that interest rate. So then we're like, and this is where I'm just kind of breaking you down the strategy of how my mind works, when it comes to identifying who we're going to target, and then what our marketing and prospecting looks like for them. Because the amount of speed with this market shift, like, you got to get good, you got to get trained at this, mentally. So when I say the market's always good for somebody, this is what I'm talking about, is how to go through this process. So then from there, we're like, okay, well, what's the amount of concessions that we can get them? Okay, well, you got a 20% down conventional buyer, you can get up to 9% seller concessions. So then we're like, okay, well, we got to focus in a price point areas and so forth that aren't FHA, that aren't first-time buyers, that this, so if I can get 9% of a seller concession, let's say we're using 2 to 3% of that for closing costs, that gives us, 6 to 7% for a rate buy down. So then now we can go out there and get those interest rates back below, let's just say 4%, or depends on where they're at that day for that. But then now on every single metric, it's the best time that we've seen to buy since 2019. So then our marketing, our messaging is like, hey, right now is the absolute best time to buy in the last 3+ years here in the Phoenix, Arizona, Phoenix metro market. Boom, here's why, and showing them that and articulating that, because as real estate professionals, our job is just to articulate we're the best guide to get them from where they're at to where they want to go. So we need to be able to identify, okay, well, who are we going to help? Right? What are their pain points that they're experiencing? What's prohibiting them from moving forward? And this is why I love obstacles, right? So I'm listening to all these obstacles. I'm just like, I'm hearing interest rates. Okay, well, if I can solve that problem for you, then you move forward. Yeah, 100%. Okay, cool. Let's go out there and solve that. We had to do the same thing in 2020, 2021 in a different way, and I'm sure a year from now it'll be massively different than what we're doing today. But it's just adapting, shifting, and we're fucking crushing it.
That's fucking awesome, dude. I just listening to you talk there for the last 5 or so minutes, like, reminded me of like what a fucking brilliant marketer you are. Like, you understand um how to look at the problems and turn them into opportunities. You've always done that in all the markets, all the different things that I think you said 18 years for you. I just hit 15 years earlier this year. Like, we've seen some changes, man, in our time, in our still relatively short period of time, in the industry. And yeah, dude, I'm of the same belief system, which is, the market doesn't determine whether or not you're successful. Your strategy does. Like, or I should say, rather, the market determines your strategy, or the strategy required to be successful. But that's it. Like, it really doesn't matter. And it's funny. It sounds to me, from a strategic standpoint, also, that you're excited about what's going on right now and what's to come. So am I. I love the change in market dynamics. It's requiring a skill set that hasn't been required in a while. It's requiring just a different viewpoint, and to as well, to your point, the piece of the pie, or the percentage of the pie that's available, is actually getting bigger, not smaller.
Yep. Yeah, 100%, dude. And you hit the nail on the head, man. And this comes to the mindset portion of this, which is like 90% of the game, right? But it's truly knowing and understanding that success is always internal. It's never external,
So
right? So if I'm
true.
sitting there blaming the market for my success or lack of success, let's just say I'm blaming it for my lack of success. That is a loser victimhood mindset, right? That is me saying it's out of my control. That's just like blaming your parents, whatever. Like, dude, like that's going to get you nowhere. That's what victims do. That's what losers do. Winners understand that success is always internal. The market has nothing to do to, when it comes to dictating your success, you do, so it's here are the cards that have been dealt. How do I go out there and best play these cards? Like, here's my goals. I'm going to hit my goals regardless. How do I got to pivot, shift, adjust? That puts you in that proactive state with that understanding that you are in full control. And here's proof. Anybody that's listening to this in any market, go look between 2008 and 2012, which again is going to be the worst market in recorded history in the United States. I guarantee you are going to find realtors, team leaders, and broker owners that were fucking murdered in that time. That's just proof to you that, dude, during the war, like, okay, people were out there crushing it. Now you just got to pick and choose. Is it going to be you, like, or somebody else? Business is a zero-sum game. Somebody's winning, somebody's losing. Just pick and choose what fucking side you want to be on.
Dude, that's so fucking true. Josh, bro, I could sit here and have this conversation for 2 more hours. I think we're set to extend our conversation later this week as it is. And we'll do that on the GSD Mode podcast. Where else is that the best place for our folks to find you? GSD Mode?
Yep, gsdmode.com. You can then, check out the podcast. It's got links wherever the podcast is, but everything else is on there. If they want information about the coaching company, I got a bunch of free training, free resources on there too, information about the software, all that. So gsdmode.com.
Guys, I'm just gonna say this. I've been in Josh and I are in each other's backyards. Had him on the show a few times. I've had a lot of my friends on the show that coach. And most anybody, if I let them on, it's because I believe in them. But I will say, like, I've seen this guy, and it's what I appreciate about you, dude, is you just fucking give and give and give. And yeah, you have something to sell too for the people that want to buy it. But even when there's nothing to buy, I see you constantly giving and giving and giving, whether that's at a live event over Zooms, teaching. Like, bro, one time I'm sure you remember this. You came in and did a webinar for my Facebook group. It was going to be like an hour. You went 3.5 fucking hours because you just were on a roll. And I was getting text messages all day long about that from like 100 people. And I love that about you. I love the way you give. I love the way you share. I love the way you think, dude. And I'm glad that we got to reconnect today. I'm looking forward to running it back in a few days.
Yeah, me too, man. It's been an honor, brother. Appreciate you.
Right on, guys. We'll see you next week. And Josh, I'll talk to you again in a couple days, dude.
Sounds good. Peace.
Later.